Ladies and gentlemen, good morning and welcome to another live trading webinar. I hope everyone is doing well so far, and let's welcome our viewers. Roland said, good morning, everyone. Good morning, Roland. William said, good morning, Theo. I hope you're a little better today. I think I fully recovered. So thank you so much, William, for asking. Larry said, good morning, Theo. Good morning, Larry. Argo said, good morning. How are you doing, Argo? Maria Julia said, good morning. Have a sunny day, traders. Good morning, Maria. Rumen said, good morning, guys. Hope you're doing all right, Rumen. Janice said, good morning, everyone. Good morning, Janice. Mogiol, good morning, Mr. Theo and everyone else. How are you, Mogiol? Nicholas, thanks for joining us. Good morning, everyone from Nicholas and Ibrahim, of course. Good morning, Theo. Good morning, everyone. Ibrahim from South Africa, correct? Raquel, how are you doing? Hope we all gonna have a great day. Absolutely. Diego said, hello, Theo. Hello, Diego. Sorry for only care of the lights, not your hero. That's absolutely fine. Marie said, good morning. Assume this comes from Germany, right? Mr. Carlos said, good morning. And of course, to everyone else who participated in this webinar. So guys, let's start with this disclaimer. And it states that this content is for general information only and is not intended to provide trading or investment advice or personal recommendation. And any information relating to past performance of an investment does not necessarily guarantee future performance. And of course, from next week, you're going to refer to the weekly trading forecast. I will repeat one more time due to a sick leave. I was on a sick leave and I wasn't able to record any podcast. Anyhow, the markets now, they already moved, so we resume from next week. And of course, if you are a new trader, please make sure you download the mobile application. Next, we have the MetaTrader platform. Let's organize our screen here. And we are ready to start the analysis. Ruben, how are you doing, Ruben? Good morning. Anilia, I can really read a little bit of Russian. Angelina, something like this. Excuse me if I don't pronounce it correct. Said good morning, good morning. HY said good morning, sounds Dutch to me. Okay, interesting. Nice. So now it's just Marie left to really tell us it is Dutch or it's Germany, but I'm sure HY is right. So, and Johan said good morning. So guys, let's dive into today's market analysis. As usual, I try to give the most accurate analysis on these webinars, and so far I think we are doing really well, right? So what's going on with the dollar and the pound, or if you prefer the pound and the dollar? It's still in a downtrend. Yesterday, some uncertainty about the yesterday's move, because we kindly false break at this previous swing low, this 8 point. I was expected to see some more of this continuation 2 days ago. It didn't happen, but yesterday the good thing is that sellers, they came aggressively and they create a new market structure here. So we have to use, remember the way I taught you to read the charts, the trending markets, they have the retracements, which everybody focuses on that, and they have the extensions, Unfortunately, no traders put attention to the extensions, because the extensions will give us an indication of how much the move it's going to move based on some statistic numbers. How do we find the extension? To find the extension, first we need to see a new low in the market during a downtrend, and we simply measure the correction leg, the pullback. So from low to the high here, I will just extend it to the right so we can read the numbers. From low to the high, pay attention to this. Here is the low, here is the high. We draw the fib opposite to measure the extension. And we have the 161.8, which is the relevant of the golden ratio 61.8, but on the extension, this one on the retracement. And we have also the 2%. It means double the distance from here to there, this leg. If you measure how many pips, it's 200 pips. So from here to there, it must be the same, 200 pips. And so first target based on the fib tool is this one here, and second target it's this one there. There are other levels to use as well if you want to insert them on your Fibonacci, yes, but we experience more that at this point here the market retraced back again. Now, it's not enough to draw only the fib level. We need to check if this fib level coincides with a horizontal support. Basically, to find the daily level, to find if you are trading the daily chart or the 4-hour chart, is useful to have a look at the weekly levels. So on the weekly chart, not paying attention to this fib extension, I can see that here the low of this candle, it's the next available support level, and this support level is just above the 2%. So in this case, this market give us an indication that, so here is the level we just drew, this one here. The market give us an indication that there is some room for the price to move downwards. Now, we can keep an eye here because likely the market will experience some interaction. The price will experience some interaction at this level, but just above the 2% fib extension, we do expect the market to react. So have this in mind. There is an area of strong support that we just identified here. We can delete the fib. We can keep that area if you like to keep it this way. And we can use the lower time frames or the daily chart for some short positions. So in this case, high probability trades looks like they will arise on the downside. Now I'm on the 4-hour chart, and I will try to channel the market to see if there is a steeper trend line. But if we use the channel, we can also have the other side of the price move. But at this case, channel is not working, nor any trend line. So a tentative channel, it's this one here, because 1, 2, 3, we do expect the price to come up to this point. Now, this channel is very steep, as you guys can see. It's very steep here. And that means if the price will respect the channel, it will show only shallow retracements, and it will move downwards a bit faster. That's what it means. Now, all these tools we use in technical analysis is to identify some structure, some meaningful structure, which we know that it gives high probability trading setups. That's all. Now, a more deep understanding of what happened here is this bearish candle followed by 3-4 very, very small price action candles. You do see that this market, it has this sequence of one explosion, usually during the New York session. Yes, New York session, London session, New York session. So New York session, London session, New York session. The market, bearish candle, strong bearish candle, both followed by some minor retracement, and boom, retracement, bearish engulfing, boom, retracement. We do expect the market to continue showing the same character. So we do expect this narrow consolidation to be breaking to the downside. And if that's gonna work out with a narrow stop loss, let's say if we enter here at the break, or more aggressive traders here with a 20 pip stop loss, we can get a very decent reward to risk. So far, the indicator doesn't show any divergence. We remember we said divergence, they show the weakness, they reveal weakness of the previous leg. So it was worth it to do some extensive analysis on the pound US dollar. Next one, euro US dollar. Yesterday we said we were looking intraday only for short positions for the reason of this move to the downside. Again, let's use the extension tool to measure the possible extension. 161.8 fib extension. It consists exactly 20 pips above this lowest point here. There are traders, they will put a couple of lines here and will mark this as a zone of support. Nothing wrong with that, because it's only 19 pips, 20 pips, let's say. It's on the daily chart. Average true range is about 70 pips. So it's okay to treat this as a zone, because there are multiple rejections from here and also at there. But saying that, looks like the pound, it's more, it's due to more weakness comparing to the euro. So far, so good, guys. Any questions? Someone will say, okay, Theo, so are you watching? Are you looking at the comments? Not really. Now I will go back to the boxes. Ruben, Jahan, yep. Hello, guys. X-Man, how are you doing? Gold, okay, gold, please. We will analyze the gold. Next one, Australia dollar against the US dollar. Yesterday, the Reserve Bank of Australia kept rates unchanged. So the Australian dollar experienced some weakness, but at the end, it stayed above this support. Remember, yesterday we commented this candle is the today's one. Don't look at that. That's the yesterday's candle, the doji one. We said, do we look to sell or to buy the Australian dollar against the US dollar? The answer was no. I don't look to sell it, neither to buy on the daily chart, of course, because the price action didn't form yet. Now, this price action shows a good indication that the market it has this tendency to push upward. And sooner or later, better sooner, I will create some courses for you guys and for all of Admirals. Of course, if you are an Admirals client, you're going to have access for free to that course. I will create a course because I see a lot of smart money concept and block strategies and all this stuff on the YouTube. Absolutely fine. Everyone can express their opinion, but people like myself and other people that we are experienced and very high qualified technical analysts, we do understand we do understand things about how the markets operate. You need to know how the market operate as by their nature, not why this higher is this high, it's a higher high and it's break of structure, and then the next order block, and if this, it's going to mitigate, and if this not, this all, they have sense at some extent. But trust me, the markets, why many times we see that, for example, here, it's a nice order block. For those they trade order block, we are on the daily chart. But there is an inside, there is something stronger than this order block here, and only a technical analyst can explain you this stuff. There is an inside resistance below this order block. And if you take this order block from the daily chart and you go to the 4-hour chart, 1-hour chart, and try to find a new order and try to find the narrowest order block on the 15-minute chart or even on the 1-hour chart, then most likely this entry, if under normal market conditions, this inside resistance will be respected, the market will never make it to the order block, because the last point the price traded and respected before the order block, it was this inside support. Now it's going to act as an inside resistance. And this is how the market really, really behave. So I'm not saying this is going to happen here. I'm just showing this as an example. Okay. Again, all these fellas, they put content outside, whether they are qualified or not, and why they have, either they have the experience in the market or they just learn from someone and they are YouTubers and they try to put this just to make money from YouTube. That's another story. That's due to every viewer to do their own research before they commit to learn something from anyone, neither from me. Okay, do your own research on the web, find who I am, what I do, go on LinkedIn, search me. My name is Theo Theodorou, so you can easily find me for the new people here. So what's the thing with that? This price action here, we can see the ATR, it's at 60, and the length of this, it's only 45 pips. But if you're going to take this, let's say you buy it right now in the anticipation of a bullish move, and you have a stop loss 30 pips, the room of opportunity, you have to be cautious that at 50 pips above the current price, there is a strong inside resistance. The strong inside resistance can cause some fluctuation at this level here. So if the price doesn't break aggressively, and that's going to show that this market had a lot of limit orders here, plus the traders, the price action traders who enter right now. And yeah, so keep an eye on that. If you are buying on a lower time frames, I see it today. I see this a good bullish opportunity because we are at support, we are at doji candle, and we see bullish divergences. Okay. But again, understand how the markets operate. Inside resistance, it's the strongest resistance you can see on the charts, the insights ones. New Zealand US dollar, bullish divergence here as well. We commented yesterday, nothing changed. Only this inside candle can pause the bearish momentum. On the weekly chart, though, there is a nice bearish structure here. So I will be looking for, yes, some pullback, but I will be looking for more weakness here. Next, USD JPY price still makes higher high, but candlestick reversal price action. It's this one here, the hanging man, and we find the hanging man price action usually at the end of a bullish move. Price makes higher high, indicator barely makes a higher high. It's kind of equal high, or a closer attention to the RSI, maybe at this point here. So from this high to this high here, there is a bearish divergence. If we isolate this high here to that one, there is pretty much bullish. There is continuation. So it's a bit of weird now. Am I buying? Am I selling? I do absolutely nothing because there is no clue here. If we had a strong resistance at this level, I will be looking to sell on the shorter time frames. But again, we all know that the markets, they're going to sell off from somewhere. Now, if this is going to be exactly the selling point, who knows? But for traders, they trade this and they take this kind of trades. Yes, it looks like a good signal for sale. So I will be, I don't trade this stuff, but if I was trading it, I will take the high probability because it looks a high probability. I need resistance to sell. I don't sell like that. USD Canadian dollar, this resistance, as you can see, it's held clearly now. If we go back to the order block idea, why you see, guys, we drew this resistance and support right at the edge of the candle, and almost all the time the market makes it at that point. Why? It's because simply the market respects the last price traded in the past, and it has the tendency to go to the very edge. If someone was trading this nice order block here with a bearish engulfing, at this point here on the lower time frame, losing trade. At this candle on the lower time frame, losing trade, because these candles here go on a 5-15 minute chart. You're going to see bearish divergences. You're going to see change of market structure, or lower highs, lower lows, change of character, however you want to call it. At this candle here, many trades, they took losing trades. You can't solely rely on this stuff. Okay, you need a combination, and maybe the next course it's going to be how to combine the technical analysis with the entry points, using also kind of order blocks and all this stuff. I will think about that and I will let you know once I put the course together. And we are right at the edge. Not even this one here, but this one here, right at the edge, rejection. And this, the yesterday's rejection create a false break from the previous day. Do you guys see that? So do we expect, we have also bearish divergences. Here is bearish divergence on the RSI. So do we expect today the market to sell off? Most likely, because it shows a strong reversal price action here. So reversal price action right at an area of resistance and negative divergence on the RSI, it's a high probability for push to the downside. Yeah. Hello, USD CAD. We went through pound CAD. Ibrahim, yes. Rumen, Theo, can you explain more the internal and the inside? We call them inside support and resistance. Okay, I will explain them. What's your criteria for the inside support and resistor? Zarabayat asked for WTI. No worries. 3 minutes to land on open. 4 minutes. Yep. We want to have a look. Let's go very quickly to check USD CHF. Still on the upwards move. We expect price to keep rallying. We talked about that yesterday. Where is the pound JPY? Pound JPY, yesterday someone commented for a downtrend channel. It's continued to the downside. Daily chart. This here it's the next support, so we still have room to move. So I'm bearish on the pound JPY, and we have time to have a look. WTI, 3 minutes for the London Open. Yes, WTI on the bullish run. It's free running upwards. The next area of resistance is this one here, guys. Mark this on your chart. It's about 94.00. Then DAX, 2 minutes for the London Open. DAX, it's on the, here it's a broken support, and the next support it found at this point here. Let's check the 15 minutes, 5-minute chart. This distance here, 30 pips. So I will go with a sell stop order here. Modify where it. So sell stop, my stop loss. My stop loss is above the previous swing high, plus a little bit for the spread. And the take profit. Guys, I have a sell stop order here with a stop loss above this high here. Entry below, stop loss above. And a buy stop above this swing high here, with a stop loss below here. Two orders for the London breakout strategy. So I'll go through the orders. First order, preferably to the downside, entry here with a stop loss above there, entry and stop loss. And for the bullish breakout, entry here and the stop loss below there. So one order gets filled, the other will be canceled. Let's see which one is going to get filled. Okay, we got filled to the downside, therefore the buy stop canceled, waiting for this market to move. Hopefully it's going to move well. Modify. $35. Here is 20. Okay, we will see how this trade will develop. HY said, isn't the USD JPY in a kind of resistance zone? If you look at the weekly, yeah, let's check the weekly. Why not? USD JPY. I spent a little bit more time on another currency pair today, so we didn't have time to check this. Okay, so here is the thing with the USD JPY. This is a resistance here. Then this is a resistance here. Here it's a resistance. They are very close to each other, this one, at least these two. And because there is a very strong resistance just above this high, guys, the market usually it's gonna give the push to take these areas before it's going to consult, before it's going to push backward. So I really do expect to see some more push to the upside. Mark it on your chart, and it's a good way for you to learn how the market works. So you will likely see that this market in the next few days, it's going to fluctuate a little bit. And yeah, because there are stronger resistance at these points here, maybe the price is going to push a little bit back, but usually the markets want to go to reach a strong resistance. And how do we identify the strong resistance? It's simply the highest traded point looking in the past of the chart. But well done, HY, very spot on that. DAX looks like it doesn't move quite well to the downside. Let's see. Guys, if you find this content and this webinar valuable, please don't forget to like and subscribe on the channel and on the videos. Looks like that the buyers, they are aggressive at this point here. Anyway, I have my stop loss order there. So let's see what the market will do. I don't see any other questions. William, DAX on daily is at support resistance level from before. Yep. Is this a question or? Okay, guys, I think I will leave you with that. Looks like we're going to have a false breakout here. And that's all from me today. I will be looking forward to see you all tomorrow at the same time. Thank you so much and happy trading, of course. Bye, everyone.